Now, here's a tough question. Property, shares, which one?
So Dad, have you ever made money on property?
It's a good question you ask, because early in my career I ended up buying a property off a plan, sight unseen. It was a steep learning curve for me, and it was back in the early 90s, and there was a big recession on here, and it was bought in Harvey's Bay, and there was a pilot strike, and so I had no tenants for 2 or 3 years, and times
That would
were
have
tough.
hurt.
Oh, did it hurt? I was trying to get out of it, Luckily I had mortgage insurance. But then as I got a bit older, I thought, I'll put my head back out and have another go. And I'm so glad I did. Property can be a great investment. Usually it's for capital gain as opposed to income. And I've enjoyed residential property and commercial property. And it's the sort of investment you can drive past and see. It's there, it's not going to move. But there's pros and cons of property, but usually you're in it for capital gain. But it's not so good for income as the share market. What about this share market? You've had some experiences with that.
Yeah, the things that I appreciate about the share market is that it doesn't require so much capital. Often when we're buying a property, we're talking about hundreds of thousands of dollars. And the share market allows you to start as little as $1. Things that I enjoy about shares is that they're very liquid. I can sell them and get the proceeds within a couple of days, or I can buy them as well within a couple of days as well. Well, most recently I've been very happy.
Yeah.
And then coronavirus came, and there's volatility. So with these, even with property, you know that there's going to be volatility, but the benefits of staying invested for a long term pays off.
Don't overcommit yourself and hang in there. Don't sell out at the bottom of the
market.
market.
It's not a 1 month strategy.
Right.
Generally, when you're talking to clients, it's a 3-year plus strategy.
Yeah. So what you're saying, if we were to sum up a bit, is that property gives you very good capital gain, provided you buy right, of course.
Well, it doesn't sound like you want to be buying off the plan like
Don't
you've done
repeat what I
previously.
did. I had a quick steep learning curve. But the point is, I think that we found that property is really good for capital gains over time, provided you buy right. Share market, really flexible, a bit more flexible. You're able to get good income from it, but you're also able to get the capital gains as well. And you don't need as much money to get into it. Property's a bigger commitment. You've got a mortgage, and you've got to front up each fortnight or each month and pay the bank.
Yeah, and I agree completely with that. And also, not everyone resonates with property.
No.
And not everyone resonates with shares. In fact, some people have been built with shares and they have 3 investment properties because they don't want to go near shares.
Yeah, exactly. But it's good to have diversification, I think. We'd always say that, wouldn't we? Yeah. Have a bit of, one will be going well and one won't be, and so on. But hey, I'm really looking forward to our topic for next time we catch up. It's about planning and helping our children and creating strategies to help them get a leg up for the future.
So relevant today.
Yeah, exactly.